What's up, everybody? We're back with another episode of Bullish Chips, where we use a proven and repeatable strategy to make money every day. This channel happens to focus on the Bullish Semiconductor ETF, which goes by the ticker symbol SOXL, but the charting method and the trading method we use can be implemented with any company that's publicly traded in the U.S. stock market. So make sure you hit that like button if you haven't already. It really helps the channel grow. Thanks to all those who continue to tune in. If you haven't already, hit that subscribe and notification buttons as well. That way you are alerted when we release new videos. Now, the videos like tonight's video, the nightly videos, we focus mostly on identifying triggers and targets for trades ranging from scalps and intraday trades all the way up to swings and leaps as well. So if you do want a deeper dive into exactly how we set up our charts, broadening formations, levels of support and resistance and whatnot, make sure you check out the bonus content on our YouTube page that I was talking about earlier. We've got a couple of videos that dive deeper into that for you. And if you want a quick reference guide, a free PDF, quick reference guide for the STRAT, which is the base of our trading method, make sure you check out the description in this video. So while we do talk about the triggers and targets, I do encourage you to watch the full video because we give some pretty good insight into the price action on all time frames. So let's take a look at the agenda for today's video. We'll go ahead and recap the price action from Thursday, January 22nd. Then we'll zoom out like we always do, look at the week, month, quarter, and year price action. Then we will take a look at the market maker's expected move for SOXL on Friday, January 23rd. And we'll zoom back in after that to set the 4-hour markers and the triggers and targets for Friday, January 23rd. And we'll do a quick review of the triggers and targets for the week, month, quarter, and year as well. Let's take a look at the 5-minute chart like we always start out with. This is how we take advantage of our proven and repeatable strategy to get into early scalps or even early entries for longer day trades. So the basics are look for the opening print or the first traded price of the day and watch price action from there. If you get a higher low at or above opening print, then you want to look to get into calls, targeting overnight high and previous high a day. If you get opening price action and a little push down, then maybe a pullback up, but you get a lower high at or below opening print, then you want to look to get into puts. So here we have an example today where opening print is up here at this 66.91 level, basically where the overnight high was. And right above the market maker's expected move high of 66.47. If you're not familiar with the market maker's expected move, we'll talk about it more in this video, and we do talk about it in the weekend videos as well. That's where we set the levels on our charts on Sundays or on the weekend videos. So make sure you tune into those if you're not familiar with that. But anyways, here we go. We get price action that pushes down. We get a bounce almost to the cent off of overnight low, and we get the lower high below opening print and at this key broadening formation level, right? This daily broadening formation, this orange diagonal line. So we opened up above the broadening formation, fell back into it, bounced back up to that broadening formation, and we got a lower high. So we went ahead and entered puts here. We actually took we were a little early or late, depending on how you want to look at it, right? So obviously we didn't get in right at open, so we missed that first push down. But then we did, instead of waiting for the low of this 2 up to be breached, right? We went ahead and took the 2-1, 2 down reversal strat. So we actually entered at the low of this 1. So once this candle broke below this 1, we entered for the 2-1, 2 down, magnitude being the low of the 2, and then obviously hoping for momentum to keep pushing us down and get that lower low. So we did get the lower high, lower low, started a downtrend on the 5-minute chart. However, we bounced basically off of overnight low, pushed up, got our higher low here and higher high. So we went ahead and stopped out right above the right as we went above the high of the previous 2 up. So we did lose just a minimal amount of money. It wasn't that bad. And then we just basically watched at that point. We were getting basically sideways signals from everything that we were looking at, including internals. So we decided to not focus so much on the short-term time frame, and let's take a step back and look at the 1 hour. So what we did is let's go to the 1 hour so I can just show you. Let's pull up this day chart. All right, so we can see here, let's make this bigger for those on phone. Oops, there we go. So this is the opening hour candle of today's price action, or Thursday's price action, depending on when you're looking at this. So here we have obviously the higher high and the higher low. Now we're going to push up. Now, if this was just a 2 down instead of a 3, and we just got the higher low, then we probably would have jumped on the like a 2-1 2 up reversal. But this was a red bearish engulfing candle following a 1. So if you're familiar with the STRAT, that is those two candles represent a 1-3 rev STRAT reversal. So the reversal, since we're pushing up, and they're both red, the reversal is obviously to the downside. So we wanted to take a little bit of caution. We saw how the 5-minute was just basically chopping back and forth, or just a slow grind up, basically. And with how slow it was grinding up, like yesterday, we pushed up, got that huge, and then we got the drop back down, but it was fast, right? This was in reverse. And instead of getting a fast bounce back up, it was slow. So obviously it was a little bit harder for the bulls to continue to push things up. If we looked at the tick on the QQQ internals, so that would be the tick Q, it was hovering around the 0 line most of the day as well. So we just continued to monitor this, and if we push back to the upside, that's great. We have calls for February and beyond, so that would do nothing but help those positions out. But at the same time, we were looking for a possibility of a lower high on the 1 hour coming off of this 1-3 rev STRAT reversal to the downside. So 1-3 reversal, a little bit of sideways action, and then we get the little bit of a push to the downside. So we did take the lower high. Once this 2 down broke below this, or once it became a 2 down, meaning it broke below the previous candle's low, we went ahead and entered, and we went ahead and sold. At the end of the day, we sold half of the position and decided to swing half of the position overnight, just going off of the fact that, right, we've got the lower high on the 1 hour, possibility of making a lower low, excuse me, which would start a downtrend on the 1 hour. If we look at the 4 hour, we haven't had a 2 down yet, right? So there's plenty of room to put in a higher low in this sequence for the 4 hour, right? We've got the higher high, higher low, obviously the higher high here. So is this the pullback that we get for the higher low? Are we going to retest last week's high? We really just kind of blew through it earlier on, right? There was a little bit of resistance here earlier on in the week, but that was part of the retest of the previous week's high. But once we bounced off, previous week's 50% level. Once we bounced off that previous week's 50% level, we just shot through it. So now that we're through it, are we coming back down to retest and create what was once resistance into support before we get a further bounce up? That looks to be the case, is what's going to happen, and there's plenty of room to do it, right? Even the market maker's expected move low for Friday doesn't put us in a lower low position. So, that's why we went ahead and swung the puts overnight. We'll see what happens with them tomorrow, but that's what we got from more of a zoomed in perspective. If we just look at the day overall, single candle for the day, we did get the 2 up. And we did have a higher high and a higher low in terms of the individual candle structure, but it was a red candle, meaning we closed below the open and seemingly rejected off of basically the level that the market makers expected that we would reject off of. So we'll see again what happens tomorrow. Maybe we just get some sideways action, but also just to bring into the picture with this market makes expected move high for not only the week but for Friday, we've got the 200 fib extension of the April 7th bull flag. So again, we've talked about this previously as being a possible point where we see a slowdown of the momentum to the upside, sideways action, and possibly even a pullback, right? Here's the monthly broadening formation, a couple weekly broadening formations. So we're just coming into an area of resistance. We have this monthly broadening formation too that we're trying to break through on the way to the next one. So we'll see what happens. But from just candle to candle structure, not the most bearish candle, but it's not bullish, right? We would be neutral just because of the trend that we're in. I would be neutral leaning bullish, but individual candle structure, I would say neutral leaning bearish. So that just leaves me on neutral. We'll have to see what happens tomorrow. If you're familiar with this channel, we don't make predictions. We just we make sure we have triggers and targets for both sides of the equation. That way, whatever side breaks, we go in that direction and we profit from that. So we don't want to get out ahead of our skis trying to make guesses. We want to make plays based off of technical analysis and not guesses. So that's what we've got for today's price action. Let's zoom out a little bit here. Look at the week. Again, oops, forget my limit buy order that I've got here. But yeah, we've got, again, two up on the week, just continuing to press higher, higher high, higher low in terms of individual candle structure. But again, pressing up against that 200 fib extension from the April 7th lows. Market makers expected to move high for the week as well. So not a surprise to see that we got a little bit of a rejection at that level, right? Let me just make this a little bit smaller here so we can get some perspective. Yeah, you can see, right, we're in this, make this bigger, there we go. We've got the April low here. Here's the flag, here's the pole, and here's the flag. So here's the bull flag that we've got these fib extensions from, right? That's the bottom of the move, the bounce off of the lows. So, there's a reason why that level is out there, and we're seeing some resistance around there as well. Again, we're not trying to get into calling tops. That's not what we do. We don't make predictions, but it does seem that things should be slowing down here as we approach that 70.08, which is the magnitude of the quarter in the year strats, which we'll get into here in a second. But from a weekly perspective, everything looks good. All right. On the month, same thing. Everything looks good. We've got a higher low back here in October, higher high now. So we've got an uptrend started on the month, and you can see how big of a green candle this is. So everything's looking good so far from the month. On the quarter, again, if you're familiar with this channel, we've been going off of this quarter chart for a while as far as the strat reversal that we're in, right? So last year at the end of the year, no, not even last year now, we're in 2026. So last quarter of 2024 was an inside candle. Beginning of 2025 was a combo 2 down, or essentially just a 2 down if you combine the two. And then we've got the combo 2 up to trigger this 1, 2 down, 2 up, which again has a magnitude of not the high of the 1, but the high of the candle to the left of the 1. So that's that 70.08 that we've been talking about. So again, looking good from the quarter perspective, and on the year, the same thing. We've got a 2 down in 2025. I already went 2 up in 2026, gave me this 2 down, 2 up reversal, which has a magnitude of the candle to the left of the 2 down, which again is that 70.08. So looking to get that 70.08. All-time high 74.21 isn't too far from that as well. So even if we poke through the 70.08, still look for a little bit of resistance there at the 74.21 level as well. But yeah, we're not going to get into calling tops or anything like that. We'll just continue to watch how things go. Let's look at the we'll just pull up the 1 hour for right now. And again, we've got the market makers expected move high at 67.54. Market makers expected move low down here at 59.90. If you're not familiar with how to get that, let's go to our options chain here. Oops. There we go. And if we look at the options chain for this week, January 23rd, we can see this is Thinkorswim. If we go over to the right, there's a number in brackets plus or minus 3.816, so we'll call it 3.82, and that is the market makers expected move. They expect that price should go plus or minus $3.82 essentially from the close price on Thursday, which was 63.72. So obviously you add 382 to 63.72 and you get 67.54. You subtract it, you get 59.90. So you can see how the market makers expect price action to move tomorrow, and that actually leaves the door open, right? We've had expected moves before where the low is within the previous day's candle, but with tomorrow's expected move, there is a possibility of not only having an engulfing candle where they're bearish or bullish, who knows, because the expected high is above Thursday's high and the expected low is below Thursday's low. But the magnitude is more to the downside than to the upside. So that would kind of play in with, the market makers expected move for the week. All the other things that we've talked about is why there's resistance up here. So again, another reason why we decided to go ahead and swing some puts. Never a bad idea with this type of price action to hedge against some of your calls that you've got out there. So that's the market makers expected move. Let's go ahead and zoom in at this point and take a look at the 5-minute candle. Let's look at the proven and repeatable strategy that we use to, like we said, get into scalps early on in the day, or just early entries into a more trending day, right? There we go. I needed to, do we have everything on screen? There we go. So we've got market, the previous high a day, we've got previous low a day, and then the overnight low and overnight high will come into play. Let's get this. Let's just draw some imaginaries. Come on. So there is the overnight high here. We'll just say this is the overnight high. And sorry, I should have done this homework before. Activate, we'll bring it down here. We'll say it's somewhere around that fib. And then let's say overnight low, because we are negative in after hours as of right now. Let's say overnight low puts us here, right? So just L for overnight low, H for overnight high, and then let's say price opens somewhere in between those tomorrow, right? Somewhere around Thursday's close. For the proven and repeatable strategy, again, it's very simple. We're looking for higher lows at or above opening print, and we're looking to get in calls, and we're looking for lower highs at or below opening print to get into puts. So if we open here, we push up, maybe reject off overnight high, come back down, but get a higher low at or above the opening print level. We're looking to get into calls, first target being overnight high, second target being previous high a day. Right up here at 66.96, which would, if we, depending on how long it takes, would, kind of match up to where market makers expected move high is, along with the daily broadening formation. So I could see price, especially if it's a slower day, just melting up to that level. But again, that's just talking about this, bringing it back to the strategy here. Looking for higher lows at or above opening print, looking to get into calls, targeting overnight high than previous high a day. If we get price action to the downside, maybe we bounce off of overnight low and then push back up or get some type of lower high at or below opening print, then we want to look to get into puts, targeting previous low a day first in this case, and then overnight low second, because that's just the order that they come in. And again, if we do reach overnight low or previous low a day, whatever is lower by the time we open tomorrow, or if we reach previous high a day and we push through it, that's fine. From the standpoint of the repeatable strategy, you probably want to scale out a little bit at that point. It kind of depends on what's going on in the market at that time, but it would be kind of smart to take some profits there, lock those in. And then, of course, we've got the triggers and targets on the 4-hour, 1 day, and everything going up from there that you can look at for your next targets. But again, just for the simple strategy, overnight high and previous high a day are going to be your targets to the upside, and previous low a day and overnight low are going to be your targets to the downside. All right, so higher lows at or above opening print, get into calls. Lower highs at or below opening print, get into puts. That's enough of that. I'm sure everybody's tired of hearing that. So let's go to our 4-hour chart, and let's look at things from more of a full day trade type of perspective. We did have a two up, failed two up, meaning we went higher than the previous day's high, but we closed below where we opened, and then we had an inside candle. So not just an inside candle, but an inside candle in the lower third of the previous candle. So a little bit more bearish than neutral, I would say. And if we do get price action to the downside, from a STRAT perspective, there's a very small STRAT right here, a 2-1, 2 down that you could get entering at the low of the 1, closing at the low of the 2. Obviously, there's no magnitude there, so that's not what we're looking for. What we are looking for, if we get that, though, is a push below that 2 to trigger this 2 up, combo 2 down, which would then have a magnitude down here of, what's that, Tuesday's low, down here at 61.37, right? So again, that would be testing that 62.19, which was last week's high. Obviously, you don't always just bounce off of something to the cent. You can get the wick through. Maybe we get a hammer type of candle to form some type of 1, 2 down, and then maybe get a 2 up for the 1, 2 down, 2 up reversal back to the upside. That's definitely a possibility, but we'll just have to see how momentum looks when we get to that point, if we get to that point. So that's what we have from just a 4-hour perspective to the downside. Obviously, that can start turning into a domino effect of combo 2 up, 2 down, and that magnitude would be 59.46. The high from, what's that, Yeah, that's from, I'm sorry, the low from Wednesday, and which also lines up with the market maker's expected move low. So that's what we'd be looking for more of a day trade perspective to the downside. Now to the upside, we've got a STRAT reversal, a 3-candle STRAT reversal that does have a little bit more magnitude here, or I'd say a lot more magnitude compared to the downside from the three candle STRAT. We would have a 2-1 2-up reversal, obviously entering at the high of the 1, and the magnitude for that move would be the high of the 2. That again comes into play with market makers expected move high for the week as well as the day. All the other resistance levels we talked about, the daily broadening formation. Excuse me. So do expect that, even if we do get this reversal, 2-1 2-up, we could just kind of stall out once we get to the top of there. But again, if we have momentum when we get there, we can obviously turn to our triggers and targets from the 1-day chart, which we'll get into here in a second. But for right now, again, we're just kind of sitting at the top of the move, just deciding which way we want to go at this point. And even if we go to the downside, it's not the end of the world. There's still, a very decent opportunity for, if we go to the downside, a 1 2 down 2 up in tomorrow's price action, at least on the 4-hour. On the day chart, again, we talked about how the single candle from the day perspective was neutral, just flat neutral, not leaning bearish or bullish, but we've got to have our triggers and targets to both sides, because there is some nice magnitude to be had to the downside, should we break through last week's high, right? If we go to the downside, if we go below Thursday's low, then we trigger this 2 up 2 down, and the magnitude of that move is Wednesday's low, again playing in with market makers expected move low for the day. If we go below that, we're in this combo 2 up, combo 2 down, and then the top of the gap, and basically where we open the week is the magnitude for that move. All right. Now to the upside, we would just have a 2 up continuation, triggering obviously at Thursday's high, and then we've got a couple of levels out here on the shorter time frames charts that we can look at as our targets. If we look at this swing here, excuse me, we can see that we've got a couple of between 68 and 68.50 ish. We've got a good zone of fib extensions, and then of course that 70.08 if we really get to running. So that's what we got. Looking at the charts, let's just go into our notes here, and oops, there we go, to our notes. There we go. So for Friday, January 23rd, there will be 237 trading days left in 2026. The close price on Thursday, January 22nd for SOXL was 63.72, and we know the week opened up at 57.34, so we'd have to get down to that level to turn the week red. Have to go down quite a bit more to turn the the month, quarter, and year red as well. They're all green right now, but if we did get below 43.13, that would flip all of those red. We know the expected move for the week was plus or minus $5.72 from Friday's close, giving us a range of 66.47 to 55.03. Obviously, we're up here towards the top of the range, and then the market maker's expected move for Friday itself is plus or minus $3.82 from the 63.72 close on Thursday, giving us a range for Friday, or an expected range for Friday, of 67.54 to 59.90. No more gaps above. We've closed all of those, but we do like to keep in our notes where the gaps are to the downside. We know where the price is, kind of being magnetized to, and we know that from a scalping perspective or an early entry perspective into a day trade, excuse me, we're looking for the higher low. I'm sorry, not higher low. We're looking for a higher low at or above opening print to get into calls, or we're looking for a lower high at or below opening print to get into puts. Right now on the 4-hour chart, we talked about the 2-1 2 down, triggering at 63.18, but not really having much magnitude there. 63.04 is the magnitude of that move, so we got 62.19 and 61.37 as extended targets. If we go to the upside, that gave us a lot more magnitude there, triggering at 64.44, magnitude being 66.96. I accidentally put that in there. There we go. And the targets in between are going to be 65.11 and 66.57. The reason why I put those in there is because we are if we open where we're at to right now in after hours, then we will have started a downtrend, right? We've already got the lower high on the 1 hour. When I say downtrend from a 1 hour perspective, we have the lower high on the 1 hour. If we get that lower low, that obviously starts the downtrend, and could push us down, but it may just be giving us the 2 down on the 4 hour just to give us a higher low. So, don't want to get too far ahead of our skis. We may not make it all the way down to the 66.96 level. So I've got those intermediate levels here for us as well. All right. On the day chart, if we go to the downside, that gives us a 2 up, 2 down, triggering at 63.04. Magnitude for that move is 59.46. But again, we're in an uptrend on the 4 hour, on the day, on the week, on the month, on the quarter, on the year. So, don't want to get, again, not too far ahead of our skis. 63.04 to 59.46. It's about a $3.50 move, which is a significant size move for SOXL in one day. So if we don't make it all the way there, look for possible bounces at 62.19 or 60.42. Now, if we go to the upside, we're just getting that 2 up continuation, triggering at 65.11. And we've just got extended targets out here. No magnitude for that move because it's not a reversal. We've got 67.39, 68.02, and 68.56 as our extended targets on the day chart. Now, on the week, we've talked about we went 2 up, 2 up. Sorry, we won't go back to the charts at this point. We'll just stick to the notes. We've already gone 2 up, 2 up on the week at 62.19. Hit a couple of our targets, and really just looking to get into the further extended targets for the week. But again, got to temper how much we think we're going to go further this week or Friday. It's just one day. We're already towards the market makers expected move high. It doesn't mean we have to stop price there, but 70% of the time they're right. So again, not getting too far ahead of our skis from a bullish position, and we may just move sideways tomorrow, which isn't the end of the world either. So we'll see what happens. Don't think we're going to go down to 52.35 to trigger a bearish engulfing candle. So we'll just kind of leave that out there. But on the month, we did trigger the 2-1-2 up, locking in November as a higher low, and going above October's high to make a higher high and start an uptrend on the quarter. We do have, we've made it to a couple of targets on the way up to the 70.08 magnitude, but we've got one more out there before we get to that 70.08 in our opinion. And then once we get past the 70.08, we're looking at 73.40 as being the next target from a monthly perspective. Again, we talked about in yesterday's video. We'll dig in a little bit more this weekend and talk about our extended targets in blue sky territory above all-time highs for SOXL. But for right now, 73.40 is where we're looking for January to get to. On the quarter, we talked about we're in a 1 combo 2 down, combo 2 up. Magnitude again for that is 70.08. Got a couple more targets out here on the quarterly perspective, but again, we'll dig deeper into that in the weekend video. As far as the year is concerned, we triggered that 2 down, 2 up at 50.76. So as long as we're above there, we're still in force. And the magnitude for that move is 70.08, and we've got our extended targets out here as well. But yeah, that'll be it for the triggers and targets for today. Everything from a scalping perspective up to the 1 year chart. Hope everybody enjoyed today's video. We try to cram in as much information as possible without taking up too much of your time. So we just ask for a like on the video. We maintain this video as a free video. Not looking for any type of revenue from this. No memberships or anything like that. We just want to spread a little bit of helpful information out there on the market for one little ticker that might help make trading a little bit easier for other people, right? You get this down for SOXL, which is a very friendly from a price to delta theta ratio, right? The premium for the contract for the high delta and low theta that you get is really pretty small. So if you can get this strategy down with SOXL, you can move it on to other tickers as well, right? It works for any ticker out there in the market. So anyways, that's enough of our soapbox rant. But anyways, like we were just saying, a thumbs up goes a long way. So we just really appreciate those who continue to support. But we'll go ahead and wrap the video up now like we normally do. If you're watching this Thursday night, we hope you get some good rest tonight. Wake up refreshed tomorrow morning. If you're watching this on Thursday morning or anytime throughout the day on Thursday, we hope you got some good rest last night and woke up feeling fresh this morning. And we look forward to getting out there and trading with you.